All right, welcome back to the channel. We're going to be going over the SP 500 and the Nasdaq 100. We're going to go over specific ranges. Now, I posted this specific chart on Twitter earlier this morning and basically going over where you need to be watching, right? Now, towards the downside, I'm going to maintain this area, right? I want to maintain this statement as well. This low, right, for everyone here to know, this is basically your June lows, which were your previous 52-week lows. 1106 roughly on Nasdaq. This area is holding very strong. This is your demand zone, if you will, right? You have a 15-minute supply. It's kind of your median area where you keep going back and forth. We go to about the 5-minute. I'm going to show you here in a second. You keep projecting off of that. And then ultimately your target zone of what you're looking for. You got to mark this up just a little bit. I don't know why it adjusted. It should be a little bit higher to there. But that's your top of the line zone. And this is really where you're trading between over the past few days. Now, we had some price action this morning that was interesting. We saw, obviously, we had a really nice push up early into the day, and then we dropped. And why did we drop? Now, this leads us to this. Big factor. We had our United Kingdom, UK, CPI was released, 40-year high. Basically, if you don't know, every time they release CPI, inflation increases like a whole percent. It's crazy over there. It went from like 9% to 10%. Wild. And it's not slowing down. Food prices, energy prices, etc., going rabid. It's crazy, it's bad, it's terrible. And this will directly affect us here in America, but probably not as quick as everyone thinks, okay? Now, before we get into anything else, I need to ask you to consider doing two things: liking and subscribing. Every single day, we go over the stock market, the indexes, because that's what matters. Stocks do matter, but the indexes above all matter, because that's what it's going to tell you how we're moving and what to expect. So make sure you consider liking and subscribing. It helps out tons to get anything from this video. Now, we're going to go back into this. And I also want to talk about some earnings that have happened and are happening right now. Go over to Discord real quick, pull up the sheet. This is our earnings for this week specifically. Netflix yesterday, they beat really good. I'm going to talk about that here in a second. You had Tesla today. They did miss. IBM beat as well. That was pretty decent. Tomorrow you have Snapchat and you have a few others. Snapchat's going to be the most interesting tomorrow. I'll talk about that here in a second as well. Now, before I go to in detail here, I want to talk about what matters and why. And it kind of comes back to this. If you've been here at all, what is the one factor that is holding the economy together, in a sense, here in the United States? And if you look at it, it is the consumer. And that is what the Fed is pushing on everyone's throats, right? So as you look here, and as we look at what's happening in UK, the hypothetical for the United States to stay strong, as far as the Fed continues to say, the consumer is strong and holding us up, right? It comes down to these earnings, right? It comes right back down to right here, these earnings. And so consumer heavy stocks like Netflix, Snapchat, Meta, Apple, the ones coming up next week, Amazon, those are huge because it's going to show us the sentiment and how much consumers can continue and are continuing to spend, right? That's a big factor here. So Tesla missing today. Although Tesla missed, I want to express it's not one of the stocks that's going to necessarily be the best show of strength from consumers, okay? Now, is Tesla important? Is it a big stock? Yes, okay? I want that to be known. It is very important. However, it's not necessarily as indicative of something of, especially consumers, as something like Meta, Snapchat, because these ads, for instance, are going out to these big companies and it's showing how much they're spending and inadvertently how much they are transitioning and working as far as consumers continuing to spend on those as well. So you want to keep seeing this. So Netflix adding people month over month, increasing, getting back to where it was. That's good news, right? Tesla, not so good news. Now, on the after hours, I want to address here, Tesla, you are down quite a bit, about $8 roughly, 3%. Nothing too out of the ordinary. You also, for you to know, your 52-week low is 204, so you still have a ways to go there. Going into IBM, you can see IBM is doing pretty well, up roughly 4%, 128, 127, doing decent. Netflix on the day, great, popped up. I want everyone to know here too, I'm super bullish on Netflix. If the market can hold up, I think Netflix can easily run to $300. But anyway, so looking at this, where we're at, you're still trading overall in this trend of this key areas we have talked about and mentioned so much, right? You're trading It's clear as day. And I want to just highlight this. As you're in this, it's increasingly more difficult to trade this type of specific price action right here. Why? Because the volume is so minuscule. And as we go into this, you can see this as well. So the volume traded on SPY today, let me refresh this to give you the most up-to-date, make sure anything no more in the after hours. So we've been decreasing. I want to address that as well. So since we made our 52-week lows at 348 roughly, right here, we have been decreasing in volume. You had 1 day of increased volume, but overall we are decreasing. Okay. What does that tell us? Again, in my opinion, it tells me we are preparing for downside, for continued downside on a broader scale chart. If we look here as well, and in my opinion, we can all agree, if we look at this, we're still clearly in a downtrend. It's going to take some really great earnings to push us through this. However, we're not getting those right now. And I think we could also agree that you are bear flagging. I think we have to agree with this statement as well. It is a bear flag, and it is looking like a continuation pattern. And you've seen that deteriorating volume on the way up. And so, again, I like to do updates, go over what I'm looking at in the market and how I'm trying to play this. Now, for myself, again, still sitting on my hands, I need confirmation. I need volume. And I do believe we're going to get the volume very soon because there's a few things happening specifically in this market that has me believing that we're about to start seeing the uptick in volume, specifically towards the downside, right? That's specifically what I want to talk about here. And as we look at this, stay with me. And if you have questions, please comment down below. We're going to talk about them. With SPY as well, I want to talk about where you're at and how you're overall moving. Now, you could argue that this is a sort of accumulation zone. You are accumulating here. You could argue that statement, similar to how you were acting back in June down here, worth mentioning. Okay, I want to address that. However, the difference between here and here is the stance of the Fed. The Fed here was pretty helpful. They were optimistic, if you will. They were ignorant to the statements of what inflation was doing, how much it has progressed, and then they changed their stance right here. Now here, we have a different Fed. We have Fed saying we have to get this under control. We're not cutting rates in 2023. We don't know when we're going to stop raising rates. Inflation's just insane. We have no idea about energy, etc. We have a lot of problems here. We have a lot of energy problems as well. So that's the difference here and why I believe this is not accumulation and preparing for downside. And I also want people to know here that yes, I do post stock picks and stock things I like for, shorter term. But overall, when you're coming here, this is a news channel at the end of the day. And I'm giving you my aspect and my view on the market. It's unbiased. There's no anything that's changing my viewpoint or affecting my viewpoint other than myself trying to make money trading, right? So I want people to understand that while they're here. And so when I'm looking at this and I'm telling people I'm sitting on my hands, I know people may get frustrated, but at the end of the day, I believe for myself that is the safest thing to do, right? Because overall, the goal is to make money on the market. And if I believe I'm putting myself in a situation to overtrade, which I'm going to show you here in a second, I do believe, sitting on my hands is almost as good, if not better in some cases, than trading. Like right now, I believe if I was trading, 1 to 5 times a day, mandatory taking trades, I think I would lose money trading right now. Now, let me show you why. As we bump it back into Trend Spider, I just want to come in here real quick and just show you the SPY. And I'm going to turn off after hours movement. I'm going to go to about the 15 minutes so you can see. Get in here. Now, when we look at the SPY, I wanted to show you this. This is the 15-minute chart. So, take this with a little grain of sand. Grain of salt, sorry, if you will. But look at where we're at, and look at how we're trading. It's not great. Now, you've had a bounce from basically 348 up to 376. If you caught that, awesome. Congratulations, you made the bag. But if you look at really how you've traded during these trading sessions, it's not really that great. You can see you had a really good bounce here, but ultimately midway throughout the next day, you just tank back down, back up. No action. This was our $1 price range. And then today you gap up and it's choppy back and forth, right? And then we have to acknowledge the new supply and demand zones you're making here as well. So not only are you kind of indecisive with your move, low follow through, descending volume as well. We know the less volume, in my opinion, the harder it is to trade because volume is the best indicator on the market. It's going to tell you when buyers are really buying, when they're confident, and they're going to show you when they're not confident. And right now, I believe it's a not confident market. But if you look here on the 15-minute, you are continually making new demand zones and supply. And this makes it more and more difficult to trade. This is my opinion, what I believe. Again, take it with a grain of salt. Do what you got to do your own DD. And as we look here, it's consistent. It's back and forth. It's chop, chop, chop. And this isn't how I want to trade. You know, if we rewind to the past few weeks, we've been swinging, right? Because overall, you've had the chop, but there's been a clear direction of this trend. And I want that to be known, is that when there's a clear direction, it's far easier to trade, specifically when you're following the volume, right? Because it becomes a lot more clear to see. So that's when it's awesome, because you'll be able to make those 40, 50% trades, swinging SPY puts overnight. You're able to do that with that confidence. But when you're trading like this, there's no confidence, because you're neither up nor down. The really small level trend is very concise and pinched. And that's where I believe you set yourself up for failure. And so that's why I'm, for the most part, been sitting on my hands. And I do actually want to let everyone know that on the day, just so everyone knows, I'm going to come back here. I did have a loss on the day. I decided to get some Netflix calls just to play a little bit of a lotto. I think I lost like $300, but that was it. Anyways, want to be really clear there. But looking at this, I believe this is where you can set yourself up for failure. Okay. Now I've done my little lesson telling you guys why you shouldn't overtrade, why you should be patient sometimes. I want to take my next step into why there's more indecision here on the market. And again, I know people are getting upset. They want the videos shorter, but I do believe there is context behind what I'm saying, and hopefully someone out there is learning from these as well. Now, as we go back in here, obviously you're pinching, you're trying to make your decision, you're going back and forth. There's no clear breakout. You're sitting in an overall stagnant area, right? And in my opinion, if you go out to a longer viewpoint, as we come back here, go to the SPY really quick, you can see you're still making lower lows and lower highs. It's very bearish overall. Now, when we go look at cheddar flow, looking at how big money is looking at this. This is again today, okay? And I came out yesterday and I said SPY was interesting because you didn't see that much. You saw a lot of puts heavy on Qs. Now today, the story was different. We're seeing the same narrative that we saw originally, okay? So when we go to SPY, remember when we were trading back here around September 12th and, you know, the September 21st, we saw a lot of puts coming in for when? We saw those puts coming in for October, I believe, what was it, 18th, 16th, 21st? I don't know. It was the mid date for October. October 18th, I'm sorry. That's when the day was. But we're seeing the same type of behavior now coming in for December 16th. And I told everyone too, middle of October when we started getting into this area, that you're going to start seeing those dates roll out to November 18th, December. And you're seeing it today. And now you're seeing a bulk of this volume. Although the total number of options is close, you know, to the same number, the overall premium amount is nowhere near. And this is where I believe bears are stepping up to the plate to take control and ultimately to push us down to a new level or a new low. Now, again, I still think earnings are important. And right now, for the short term, the next, week, 2 weeks, I think earnings move everything. They're the most important factor. You need to be watching those like a hawk. However, big money, in my opinion, is setting up for more downside. And again, with Qs, you're seeing it being established here as well. Okay? More are coming in. You saw a pretty aggressive October 21st come in today as well. This is the question. This is the concern. And it was October 21st, not October 18th. So that's what you're seeing, right? And this is where I sit and I take a step back and I say to myself, one, like I just said to you, trading this chop is idiotic. Two, the broad scale of what we're doing, we're bearish. It's clear as day on every single index. You're extremely, extremely bearish. And then three, we should be positioning ourselves, specifically for myself, not financial advice, do your own DD, positioning ourselves with time, because time is going to be our friend, specifically when it comes to options. So as I'm looking at this, as I'm looking at my strategy, and this is really just kind of like a broad view of what I'm doing, so I want people to know that. It may sound like I'm lecturing everyone, but right now, I believe we have got to be focused on date and time with these positions, giving ourselves wiggle room, right? So if you're trading short dated options a week, 2 weeks out, chances are you're going to get stopped out if you even have a stop, right? Because you're going to move 10, 20% really quick, right? Because you have no clear direction. SPY, you bounce up, you come down, you bounce up, you go down. However, if you followed me with those, dated puts that we had for October and November, you understand how those move. You're going to give yourself time, wiggle room for a little bit of maybe downside on those positions, and you can average in better and deeper. So right now, going into tomorrow, I'm going to make my intentions very clear. I am looking to start adding to my longer term short position on SPX, SPY, Qs, etc. I'm a massive bear. I believe earnings are not necessarily what we wanted to see. I believe the consumer is weaker than I thought. I believe we do not have as much time as we may have thought. I believe the overall midterm elections are coming to an end, and I do believe we're going to see the bloodbath entail from that as well. I believe people are not concerned and they're not ready for a state of stagflation, and I believe that is going to be a major impact here as well. And as we look at other massive indicators such as the dollar, and we look here, you once again are bull flagging people. It is the best overall continuation pattern, and it is stepping in here once again. You are bull flagging, in my opinion. And this might be one of the strongest ones you've seen. We've respected all supports. You didn't even pull back 50% of your last leg. In my opinion, this is setting up for pretty terrible downside. As we look at yields, as we look at almost every indicator, they are through the roof. Yes, yields are, they're actually back inverted. Actually, they weren't inverted for most of the day, but you're as high as you've ever been here. Not as ever, but your 10-year yield has not been this high since roughly 2008. Congratulations. You win. COVID. You killed the market, right? This is the concern. And this is not going anywhere if we really look at this. Your 30-year yield, you're going up like rabid. You're going crazy here. If we look at the overall inversion, there's nothing changing here. It's getting worse. It's getting worse. It's getting worse. And like I said too, once you have this stagnation, once you have this pinching going on here, I believe volatility will occur and it will be violent as well. So this video is not to spark fear in anyone. It's to really push people to start to educate themselves on what's really happening here and the real factors underlying here. Now, I may come across a little bit bullish. In short term, you might bounce. The next week or two, you could. Awesome. But the moral of this story is have time on contracts and be playing and really looking at the market down the road and not 2 to 3 weeks out. That's what I encourage right now. Is start really looking what's going to be happening in January, in December, and what big money is doing to get ready for those times as well. Because I believe the answers are right in front of us. I'll have an update for you tomorrow, and hopefully we'll have Snapchat earnings as well. But right now, I believe personally we're in trouble, and new lows will be coming very soon.